Okay, we are live. Ladies and gentlemen, boys and girls, children of my age, welcome to another episode of Aura 8. Where else do I have to go live? On my Instagram. I'm going live in about 7, 8 places. You know, do you remember, Vineet, where was the first time we met? Do you kind of remember, or you don't? Well, I
Uh,
have a very interesting story around that.
okay, first of all, hello to everyone. Great to be here. I was at AIBC or somewhere. I don't specifically remember, but one of the events, right? Or maybe I'm wrong.
No. Uh, this was at a penthouse in Marina. There
This
was
was
a
classes, even classes house.
Yes.
Okay.
This is the time when I think Bitcoin just went down from 75,000 and it kept dropping down. And all of us were, sad and, we were trying to figure out, what needs to be done. There is one guy who walks in really smart, wearing a black suit. And he's like, I sold all my Bitcoin holding a long time ago. And,
Yes.
and I, tell me,
Yeah. So I don't think it was 75,000. It was more like 69. Okay. I
yeah,
remember this
around,
was, yeah, this was last cycle when, Bitcoin was at 62K. I had this bet in Dubai that Bitcoin is going to 25,000 and the other guy said it's going to 70. So, when it went to 69 and then came back, I was all cool about it because, again, the 4 year cycles have always worked. In this cycle as well, I went on CNBC on the 10th of October and said that, we are looking at a 70% drop. And there's this whole photograph of me with 128K BTC, and in the night it crashes down to by 30%, and then we had this 50% call. So it has more or less followed that 4 year cycle. The adoption has been not really something that, when people have been were in October or September saying that institutional is there, they weren't even clear that only 11% of the institutional sold Bitcoin. It's not masses. So yeah, that was the fun times, as I say. It was not just Bitcoin. That was the time when anything that you would touch would do a 300x. I remember paid network pools, Star Atlas at 600x. Yeah, those were fun times. The parties were good, the people were good, and it was fun being in crypto.
Yeah, absolutely, because everyone out there in the party are actually zombies because our portfolios are deep in red, and there's one man who is all confident and all chill, which is Vineet here. But then we got to learn a lot from him over the period of years. Whenever I've had an opportunity with him, I've personally got to learn a lot, though I've never told him this personally. I'm telling them, I'm telling him on this public platform. Thank you, Vineet. Honestly, I've learned a lot from every interaction from you. I know we men don't share, these kind of compliments, but thank you, for making every conversation of ours a lot more meaningful for me.
I think the connectivity dropped off. Is it me or is it? I think everyone can't see Weber right now. Yeah, I think he dropped off. If it's still live, I can continue. Luckily, last 4 or 5 years has seen the bull markets and the bear markets both, and we have met a lot of people interacting with whom you ended up learning a lot. You ended up understanding a lot. I think Weber was one case as well. We met a lot at crypto events in the past, and now we. I think our last interaction was in Singapore when we met at on the sidelines of Milken as well. So now that whole move is coming where institutional capital is coming, and we all are doing TradFi stuff. So yeah, it's been great time. I know. I think hopefully he joins back. I don't see him yet. Now he's back.
Yeah, I'm back. Okay, great.
Hello.
Okay. That is Sarah, co-host. I'm sorry, I had some problem. I had to.
Hello,
Uh,
Vineet. How are you doing? I heard it
Sarah,
all. I heard
how
it
you
all.
doing?
I heard the entire experience and how you guys met. I'm really glad that I met someone like you who's really fun and as serious at work as well.
Yeah, this is a fun space to be in. There are more younger people around, so it's not like truly TradFi where you go suited up and the discussions are all serious. But yes, work needs to be done as well.
but on that note, do you think the landscape is changing? I know that you have stopped attending a lot more uh, Web3 events, but I think the DGen crowd is now slowly fading towards a more TradFi crowd. Have you seen that trend?
So when you had dropped off, that's what I was saying. We have met a lot of people in Web3 and crypto events over the last 4 years, and I think our last interaction was at on the sidelines of Milken. If you remember, we met in Singapore recently. So I don't know about most of the people, but for me, definitely there has been a shift going towards more TradFi events. Whether it is family offices, whether it's institutional capital, because what I see personally is that unless we don't get that real TradFi capital, crypto bros have money, but it's not that money that will take us to a multi-trillion-dollar industry. So for me, I've started focusing on it. In fact, I've been talking about one example, which is a very bad example, but that's the example I know of, is
We
of
love
Harsh.
we love bad examples.
Yeah, so it's the example of Harshad Mehta, when Indian stock markets were early in their space, nascent in their space. Harshad Mehta figured out that until real capital doesn't come, this won't grow. And he did some funny stuff, that was technically scammy in nature, but he bridged the capital from banks and capital markets into the stock markets, which really took them up. So, not saying that you follow the same book, because that was not legit, but yes, you need to get those family offices to come in, and that's where I have started shifting. Whether it's going to FII, whether it's going to the economic forum, or whether it's going to family office events. That's what I've been doing, meeting a lot of people, explaining to them that what digital assets stand for. It's a lot of these guys with 100 $200 million checks really are into equity or fixed income or things like that, and don't even understand what a token represents. So yes, I have personally definitely been focusing on this segment. I think Weber froze again. No. Hello.
I think Vaibhav froze again.
Yes.
So Vineet, on another on a similar note, Dubai recently.
Hello. Sarah, you were saying Dubai recently. I think they are Vaibhav and Sarah are out and they have a patchy internet connection. Yeah, Sarah, you were saying. Sarah, can you hear
Oh
me?
my God. Yes. Can you hear me now?
Yeah, I can hear you now.
Perfect. So I was saying that Dubai recently launched its universal blueprint for artificial intelligence to become a global leader in AI. What do you think this space is going to take them into? Is it a proactive stance on both AI and Web3 regulation? Will this help the global markets?
So I think everywhere there has been this whole mad rush towards AI, where whether it is the infrastructure that is being built or whether it's the products that are being built, you see a lot of companies. OpenAI had started it up, and then now Perplexity, everything is coming across, and there's this whole hype of AI. And Dubai has this habit of riding the waves always. So value-wise, I think this definitely will add value. I'm just personally a bit more cautious on this space. Cautious because I see quite a lot of similarities between the .com and the AI hype that's coming across. When I say similarities, it means similarities in terms of valuations. Do I see value? Internet always had value, but the overvaluations of Yahoo and the companies at that time didn't make sense. Today, when we see multi-trillion, billion-dollar and multi-trillion-dollar AI companies coming, I see that as a risk as well. There's always a lag between adoption and revenue coming in. That happened in the .com era as well. The companies were coming in, but Amazon started selling over a period of time and not on day two itself. So I think this is definitely a wave people will really build uh, wealth on. Will people will build futures on, but you know, being a bit more cautious, you have to play this game right. Otherwise, if there's a, you know, if they say there's a bubble, you can actually get wiped out.
You know, I've known that you have invested very early at SWI in your previous organization. Tell me, how do you actually vet a deal, and so that the founders who are perhaps listening to this would understand? Because once SUI becomes SUI, everybody wants to get in. But then, as I was telling your colleague yesterday too, Dhaval was with us, that you guys get to understand the trend before the retail audience or even before the DJs, because somewhere you are responsible in kind of shaping the narrative, because that is where you kind of give them the funds to go ahead and actually uh, allow them to build that narrative that they are going to create. So, like with Sui specifically, did you go because like they had some big names associated, or like what was your criteria specifically with Sui?
See, again, when it comes to retail, they always have this pain that venture capital gets the best deals up front, and they miss out. There was this whole story about venture tokens dumping out. Now, I have to explain people how venture capital actually works. We invest in 100 plus deals. Out of 100 plus deals, 90 more or less crash out, and 10% give you the 4 to 5x on the fund out. So how do you evaluate these 100 deals that you invest? It's not that there's a difference in deal 1 and deal 99. Mostly all of them are run on similar parameters. One is who's the founder, what has he done, what is his capability and capacity. When I talk about capability, that in Sui's example, if I go step by step on Sui's founder was Evan Cheng. One of the founders was Evan Cheng, who used to head technology for Facebook. He was hired by Zuckerberg, and he was building the Libra project. So the founder background existed. He had built scalable technologies. The second thing was, what is the startup trying to do? Is the start in case of Sui, they were building a smart contract platform that would handle more transactions compared to say a Solana or a Ethereum. So basically, they were trying to match the Visa's network, because tomorrow when real adoption comes in, when smart stable coins get used every now and then, when lending borrowing happens on Aave, you need a chain that can handle millions of transactions per second. So Sui had the team, Sui had the technology coming out from the Libra ecosystem. And Sui, when it was raising capital in a bear market, they were raising $300 million. They ended up raising $450 million. They were oversubscribed. So when you look at these three parameters, you understand that the team is great, the product they are building has use case. Again, the risk that you carry is, will adoption happen? Aptos also came from the same bucket, but Aptos didn't. Had I accidentally put money on Aptos, I would have lost. So point is, you look at these two, three parameters: the founders, the product they are building, and the adoption or the metrics that they have, and the capital that they have. We also did Solana. When Solana was crashing, Solana had crashed down to 9 cents, $9. We actually ended up buying Solana from the market. We did a foundation deal at $30 at a discount, and we bought the FTX liquidation as well. Again, the metrics remained the same. When FTX collapsed, people said Solana is dead because FTX holds Solana treasury. But we had to look. We have this report which we had posted that time, that the number of active wallets on Solana were the highest, the number of active users were there, the people who were building. So it remains the same as investing in your as a, and as investing as a venture capital, the team, the traction, and the capital that they have. And that's what I advise people. When people invest in, say, pump.fun, people say this is a hype and I should invest. They should also understand that pump.fun has close to 700-800 million dollars in its treasury. Meme coins is really big. It's like, I give an example of Jordan Belfort. Pump.fun is a Stratton augment of crypto as of now. So you have to understand a lot of these parameters before investing. It's not just a
Do you
random.
think Pump.Fun is still relevant?
Again, I had a chat with the founder Noah a long time back when he was doing that $4 billion round. It See, if you look at his, I don't know if you ever engaged with him. If you look at it, his vision, vision was not just to build a, meme coin launch platform. He was looking at acquisitions. He was looking at product development. You never know whether a perp dex will come out from it, or whether a centralized exchange would come out of it, or whether they will hire new products and service and build something. They have when you have 800 million dollars in your treasury, you can build a lot of products. And Pump.Fun would be the meme coin launch pad would be the first one, and they can evolve. I don't know how he takes it ahead. Fingers crossed. Hopefully, he does well. But is it relevant? As long as gambling is relevant, casinos will be there, and Pump.Fun will be there. Prediction markets is nothing else but Pump.Fun in a real world alternate.
As a VC, since you mentioned Aptos, um, Mo's exit with Aptos has been very controversial.
Mhm.
I would love to know from your point of view that, though Mo has started a fund with his exit and stuff, he has a great story which is absolutely inspiring. Taxi driver son going ahead, working with Facebook, launching Aptos, and the exit. So the narrative was, I think, pretty strong. But then, how how does the insiders look at it?
See, again, first of all, this narrative driven business in crypto is amazing. Every start of the cycle we hear, again, not going in Mo's example, but on general example, this XYZ kid put $20 and became a millionaire. And we have had these narratives of Cinderella Man. Cinderella Man is this movie about the boxer who came out of the depression when he was really down and out. So, all these narratives, I think we need to take them with a pinch of salt. I'm pretty sure the taxi driver's son was in San Francisco and was good at studying. So I don't want to go there part. But one of the biggest issues that I see in crypto per se is that when unlike Web 2, what happens in Web 2, you have to understand the cycle in Web 2. You come up with an idea, you go to your mom dad and take $100,000 to build a presentation, go to angel investor. From angel investor, you build a deck or a product, raise Series A, $200 revenue, Series B, Series C, Series C, and 8 years, 9 years later, you get listed on an exchange, and finally the founder has liquidity, and founder can do great stuff. Or it doesn't happen in a week's time. It takes 8 long years for people like Paytm to come out with an IPO. But in crypto, the biggest problem that we see is that you have a token, 6 months later you launch the token, you have liquidity. Founder suddenly has access to 8 10 billion $1 million of capital. This is where the focus has a risk to get off. Founders in crypto have smaller attention spans. This cycle, I launched XYZ token, I made $20 million, and now I have capital. I need to focus on my own startup. Mostly we have seen that it has not happened. People haven't continued. Everyone is not a Ripple founder, or everyone is not a what do you call Vitalik Buterin, that they have continued for 2 3 cycles, and that is the time you require for any project to go on and become big. In Aptos's case, I think there was enough liquidity generated, moved out, built up a fund. I don't want to personally comment on a person, but this is a big issue with this segment, that we need founders who can stick along across 2 3 cycles and try to get the product market fit. Until users don't adopt your product, it's just one random technology available at random.
Absolutely, because we have seen, with so many active chains, there are only maybe 3 or 4 chains that is actually doing all the action, right?
Sir, if I give you $50 million tomorrow morning in cash, do you think you will be doing podcast from day after tomorrow? See, because motivation doesn't remain the
See, I
everyone.
know, I know where you stay. I'm coming in for the $50 million.
No, no, see, understand the point. Everyone doesn't remain motivated. Everyone, you know, when you look at Maslow's pyramid hierarchy,
The
everyone has certain things, and finally he reaches nirvana, and the world changes. But at the initial time, everyone's running to make a lot of money, and once money is made, a lot of people stop in the race. Everyone doesn't want to end up becoming do great stuff. Motivation to build $1 billion company is much different than just what do you call making some money in a cycle. And
what do you
sorry.
what do you think it takes for a founder to actually stick on? Because we have seen multiple founders, uh, in different parts of the cycle, but somebody like Vitalik or somebody like every uh, like what does it take for them to actually stick on throughout the game?
Initial strong success is definitely critical. Unless you don't end up getting Ethereum, unless it doesn't become really big, technically founders wouldn't, hadn't it been the number two token, mostly the founders wouldn't have been there, because with success, that now you have a brand name attached to it. Second, it's a person's individual capacity, the perseverance part of it. Can he stick on, can he just continue going with that? These are two things which I think are very critical for making a founder stick. Less distractions are also important. Our, as I said, our industry is very young, too many parties around, so there is distraction for sure that comes from this industry. But we need a mix of that, and we need someone who's focused. In the end, Coinbase founder has stuck on, Ripple's founder has stuck on, Ethereum has stuck on, what you call this Polkadot founder is definitely building something. So there are founders who are sticking on because they have initial success and they have a brand name to protect.
So Vineet, we recently noted that many investors are in a wait and watch mode. Is
Yeah.
this because of sheer dominance of AI in the current venture capital narrative, or is it just the same way where they are advising investors to watch for during market declines?
So basically, people are wait and watch mode because there's too much volatility in the market. We have our weekend ventures run from the US, where suddenly there's a tweet that comes on Friday, and Monday there's a different tweet that comes up. So there's this whole saying, Aesop's fable has this thing, the boy who cried wolf. Every time the wolf is cried, some of the villagers were coming. One fine day they said, "Let he's all bullshitting." So, and then people lose hope. So today, I think investors are facing that dilemma that every time there's a volatility which has no logic or rhyme or reason. So this is why people like me are in a wait and watch. People are saying it's a bull market already. I personally don't think we are going up. I think there's a leg down because again, where is the liquidity in the markets right now? I don't see majority of the liquidity. When people say the XYZ is XAI or SpaceX is valued at $1 trillion, where is the liquidity for that $1 trillion? Valuations and liquidity is something that people don't understand. I learned it 15 years back. If tomorrow you want to build $1 billion company, make a billion shares and buy 1 rupee of your share, you have $1 billion worth company as well. So similarly, today in valuations, everything is valued at 100 billion too. Are there people to buy that what you call 500 million that you have? I see liquidity is thin. I see markets might go down. We just need that one small trigger. I think the last drawdown trigger was 10th October. The stablecoin was a trigger. The Iran conflict was a trigger. One final structural trigger, and craziness can happen.
What are you anticipating?
I say again, we're not in the forecasting and magic ball business. Anything can happen. When last time I said that it's going to retrace 70%, people were asking me, what do you think will be the black swan event? I said, I have no idea. My job is not to predict black swans. My job is to be ready if a black swan comes. Today, if a black swan comes, today, if Bitcoin goes to $50,000, do you have 10 million, $20 million to buy Bitcoin? If you don't have, it can go to even $10. How does it add value to your life? So I don't know what is the black swan event, whether it will go down. I'm just waiting. If it goes to my levels, I buy. If it doesn't go to my levels, I keep on investing in venture and still make money. So up or down, our job is to make money.
Absolutely. Tell me, what is your level for all the traders who are listening to us in Binance Square? So we get a little insight to your numbers.
My numbers have always been 50 to 80K. Will I enter at 70K? No. Will I enter at 50K? Definitely. Will I go all in at 50K? No, that is also not strategy. You always have a DCA strategy because I think the cost of mining Bitcoin, Michael Burry came with a number of 658,000, which is not right. Majority of hash rate comes from the devices that they come from. Cost of mining Bitcoin is 48K to 52K. So if there's a drawdown, if there's a black swan event, because in the end stock markets are at an all-time high, if they retrace 20%, for all the traders who are listening to it, they can all. I was doing this activity in the morning. You can go to Gemini and forecast. Give Gemini this task of what is the expected downturn in Bitcoin on the lean markets, because every 4 year is a negative market. So it will give you numbers, and then add to it after that query. After you get your numbers, you can also run a query that what happens if there's a retracement in the stock markets at a 20% crash, where does, and you get some figures. I will let people do the activity rather than me predict it. It's just nothing to do. So why don't you try out some numbers? You would have to do it in an Excel sheet in old times, which we used to do. Luckily now you have AI, the same AI which Sarah mentioned, and we can get this data. And you can have your levels. It doesn't mean that if I say it's going to go to 55 or 50K, it is going to go there. It just says if it goes there, it's once in a lifetime opportunity. The value is, it's an asymmetric bet. If it goes to 50, chances of it going to 25 are 50%, which is not sustainable, because mining cannot happen at 25K. So you can lose 50% of your money if you sell. And chances of it going to 200K, because it's a $100 billion asset on ETFs, are higher. So you have 50% on the downside and 4x on the upside. I would always buy such a deal. It is common sense to buy asymmetric deals like that. But will I buy it at, when people were buying it at 100, 120? I said, this is foolish, because this cycle all-time high looks at 150, 200K. Just to make a 30%, I'm not going to risk 50% of my capital. So 50 to 80K is, I would say, DCA every day, what you call X dollars into the market.
So Sigma Capital manages over $500 million in assets.
No, it's
When
a
you
$100
look
million.
at
It's
100,
a hundred.
100, oh, sorry.
Okay, it's a $100
So,
million fund. The 500 million comes from the assets under management from the last ones.
yes, yes.
The last fund I
So,
used to handle was $258 million. The fund before that had
mashallah.
150. So that's how we have had that AUM. But no, Sigma is a $100 million.
I'm sorry. Let me rephrase this again. Sigma Capital manages over $100 million in assets.
Yes.
When you look at the productivity shock, how has it shifted your fund strategy regarding liquid tokens versus early stage blockchain infrastructures?
So sorry, when you look at, I didn't get that. Get your words. When you look at,
When you look at the productivity shock,
yeah. So see,
how
I think,
how has it shifted your fund strategy?
see, fund strategy for us, the new fund comes, the learnings from the new fund come from the last two funds that we had. Liquid is more about capital preservation. When you're built, this is the first regulated fund. The last two funds were more of a single guy giving me money, and it was more of a family office. And, for them, this was money just to play around and understand something. But this is more regulated. This is more where TradFi capital has put money. For TradFi capital, the risk is, in a bear market, how much drawdown will you get? So liquid strategy is all about capital preservation. Today, if BTC goes to 50K, the drawdowns are less, but the upsides are high. You can return back money in 3 years. And venture is where you will get multiple. So I always mix between liquid and venture. Initial cycles when the markets are going down is more about investing in liquid, because you can go in and come out at any time, and whenever the market starts rising back up, you can return money. It's a mix between these two. Ideally, I would say liquid has to be 30 to 60% of your strategy, and venture has to be around that 40 to 60% of your strategy. Been doing that in the past, adopting it right now. uh, Timing it has to be correct. You need to know whether you are going down and you invest in liquid, or whether it's going up and you invest in venture. So, and of course, finding the right, in the end, when it's going down, you can buy X token and Y token. Y token, you have no clue what they're doing, and X token has a great team. So you would, of course, invest in a project that has some scope.
Do you actually see, we spoke a lot at multiple events. I remember we were at a panel in Dubai. We have always heard about the crypto bubble going to burst. Do you
Hmm.
think the crypto bubble is going to burst? Is it already bursted, or it is around the corner? Please, like, enlighten us.
Had AI not been there, I'm sure crypto bubble would have burst someday. But now with the AI bubble, with everything valued at $1 trillion, I think AI is a bigger concern that we need to look at. When we say about bubbles bursting, it is all about crazy valuations that are around. We are still very seed stage in crypto. Again, if we say lending, borrowing happens on crypto, how many people out there know about Aave, and how many people have gone out? And because I talk to real regulators, government heads, regulators, TradFi Capital. None of them have used Aave, or none of them have used Morpho to lend borrow. Or people even don't know what WorldCoin does. What the WorldCoin is, something like the Aadhaar card of India, digitizing your identity. So I think it's very early. It has not caught the imagination of people still. Is it a bubble? Yes. Super valuations in products which have zero use case. When you can have a Doge going to $1 for no reason, definitely there is overvaluations, but definitely not that crazy. Has the market entered into a bear market? Definitely. We already are sitting at 40%, 50% down. Uh, .com sort of a bubble burst, not yet. Hopefully, we have three more cycles, we make some more money, and then it becomes a standard. Because see, in the end, it will become a standard asset class where your kids will come and say, we made 10, 15, 20% a year. That time it has become institutionalized, it has become standard. I think three more cycles before that happens.
So you're saying that there is still a chance to do 100x or 50x on tokens now?
RaveDAO started at what price did it start at? 10
We
cents or
spoke
5?
even yesterday about Rave now.
So people have made 100x. It's nothing new. The Burp token went ballistic as well. Burp token was Moonbirds. Again, see, you can make 100x and 50x in a lot of venture deals, in early stage deals. It's nothing new. So the point is, find out of 10,000 tokens, how do you find the five that really end up doing that 100x? And let's also be fair over here. The total crypto market is worth 3 trillion or 4 trillion right now, right? That is what is Apple valued at. That is what you call Nvidia is valued at. So basically, you have an asset class. Basically, crypto can be considered as a cross-border stock market. Now you have a whole crypto class, which is equivalent to a small dot in a stock market, global stock market. So the potential to grow is big. Can you can we have 100x's? We'll have 100x's for the next 8-9 years. It is just that, do you find that 100x? And also you have to figure out, is it that 100x made out of active market making, or is that 100x made because there is real value in the company? So these are some things that we'll have to look, and I'm pretty sure we'll make money. I don't promise people 100x's. I tell people you should perform better than the market. A good fund like General Atlantic has ideally given a 21% IRR over the last 20-30 years. So if you can do a better than 21% IRR and double the money in 3-4 years or 2-3 years, it's not bad returns. Going for 100x and losing everything is known as gambling. Going for a better than market return is known as investing.
Very well said. Very well said. Sarah, do you have a question? Okay, Sarah, maybe still thinking of the question. What is your favorite meme tokens? Where do you like see a lot of potential?
See, again, I am not super into meme coins. I know of Doge, I know of Shiba Inu, but I'm not into it. I would ideally be more interested to invest in a pump dot fund, because it is a platform for launching meme coins. Jordan Belfort launches thousands.
Spoken like a operator, truly. Yeah.
Yeah, because you never know, because they have nothing behind them. There's no utility behind them. So why would I invest in something that has no utility? I would prefer to invest in something where there is a platform to launch that up. Is it legal, illegal? That I don't want to go over there, but I'm not because it has no utility. I would either get into a what do you call asset like Bitcoin, which is gold, or I would invest in these 10,000 tokens, which are basically tech stocks trying to change the way we what do you call interact or transact. Out of this 10,000, also there are some categories that I would look at: real world assets, lending, borrowing, identity, what do you call layer ones, which basically mean the infrastructure. And for me, these are the two categories. Meme coins are more or less uh, things which have no value. NFTs for me are interesting because they are gated communities. Just like in Dubai, you have the Capital Club and you pay 20,000 for annual membership. You pay membership for NFTs. If I have these NFT holders like CryptoPunk, where I am at a dinner where 100 millionaires are there, it leads to business opportunities. Had I been young, I would have bought a Pudgy Penguin or a Bored Ape, not for the 100K price, but for a cheaper price, so that I could go to cool parties. So, depending, NFTs is also interesting to me. Stable coins, definitely not investable, but for normal people, in India, when you see people were advised always to put money in a fixed
FD.
deposit FD. Now with stable coils, you can get the same yield, and you can have safeguard yourself from currency depreciation. So for me, ideally these two three classes are the ones where you should be investing in. Me, whenever if there's no casino in Dubai, you can go and gamble on your casino. 90% of the times the house wins, you will also lose. If you're lucky, this is that $20 that you didn't care about. I'm not into that.
Tell me, at the first time, which was your major hit that you took? Like, you're in your third fund. Which was the major hit that you took, saying that, "Arey, this will do 10x," or this is like going to go to the moon, but then it kind of like like it gets rugged or something. And what did you learn from it?
So my first fund, when I was given the capital, I think the first two investments were more or less the rugs. One was known as ACDX. ACDX was building, I think, perps or something like that, and the second one was an NFT play that had come at that time. There used to be an investor known as K Vester, who I think launched Nakamoto Games or something later on, which really went well. Now, thing is, those two were pure play rugs. This was cycle 2020 where everything was going to moon. These two really didn't do well. The background, the founder background was great. The NFT infra play was good. ACDX was doing good, but we figured out that they were not there to build. But I got saved luckily because these two didn't. I did a round on ACDX at 80 cents, and people were saying it will go to $4, and pre-market was $4-5. It crashed. I got lucky because the third investment that I did, which came from a guy who used to run a fund out of Middle East. His name, he used to run Shisha Finance also. He gave me a introduction to a token known as Bondly. Bondly ended up launching at a 70x or some crazy number like that. Bondly went up till the founder left, and then it crashed. Animoca ended up buying that up. So, but luckily, because I had a project which already did a 70x, the two scam projects really didn't matter. But we always have such cases where no matter how much due diligence you do, you end up getting fooled. There was another one which had US senators and this advisor and that advisor on board. I'm trying to remember the name of the project. It was a project done by a British founder, some protocol, and they never did anything. They completely rugged it up royally. So, see, when you say rugged, for me, rugged means bad intent. Rugged doesn't mean startup getting startups fail. 90% of startups fail. But if you give money to someone who ends up taking it home to buy a Ferrari, then that is for me a rug. In crypto, people confuse rugging with failure also. So I have had such cases. I'm trying to remember that other project, but somehow I don't. I'm not getting the name.
And how much did you lose in those projects?
Again, normally people should always have a standard ticket sizes. For us as a small fund initially, when we had a $10 million fund, ticket sizes were 50K to 100K. I would averagely put that money. I would not put crazy amounts of money into that. You put a $5 million in Sui because they are raising 250 $300 million. You don't put a $5 million in a token which is raising $5 million itself. The point is, ideally, I would have in the first one lost 50 to 100K, but then if Casper gives you a 60x, if Star Atlas gives you a 60x, 600x, if paid gives you a 600, it doesn't matter because you made 1,000x on that 50K already. I think this other one, for some reason I don't get the name. We put a quarter million or a $500,000 that got rugged. We ideally in the last one did quarter million to 500,000 rounds. A lot of those tokens have failed as well. I think Portal to Bitcoin was another one which really went bad. Whether it was timing, whether it was founder not doing anything, I don't know. But we did lose. We had our fair share of losses as well.
So, I think I've mentioned this to you in person when we met, I think in Singapore, uh, outside the hotel after your side event, that your journey from a cabin crew to building 100 million crypto fund, that's an insane journey. And for me, it's hugely very inspirational. What is the first principles that you use in life, uh, and how did you do the transition? It's a beautiful transition. I think a lot of us are somewhere in our life wanting to do that transition. So please inspire us further.
See again, I think the first job that I did was I worked with Emirates as a cabin crew. The most amazing job. You end up traveling around the world. You end up staying in the best hotels in the world. The crowd is really amazing.
and
Again,
you and you of course partied a lot too.
yeah, yeah, of course, life is really amazing. But again, there's a background to it. I also studied at the top engineering college in India. NIT or REC is known as one of the top colleges. So it was not that, I did my 12th and landed up to do. I ended up at this job. It was amazing. You got exposure to the world. My peers in the college were sitting in a office in Bangalore or Dubai and building up maps. And I was going to 100 different countries and meeting people. Meeting people always enlightens you, always makes you see the world in a different place. And from there, from the networks I made, from the people I made, I ended up landing at my MBA, which was a top 10 business school in the world. I studied at IE, I studied at Cornell University as well. So, when your life is amazing, when everything is great, why would you take the risk? It is, I call it the red pill, blue pill of Morpheus gave to Neo in Matrix. Take the red pill and you will see the real world, and take the blue pill and you will still sleep, wake up back in your life, and life is fun. So I accidentally took that red pill, where I said, let's do an MBA and life will be amazing. Figured out life is amazing, but it is painful as well. So did my internship at a company that became Rocket Internet, and took that internet to India and built up companies which were pretty successful. And then COVID came and screwed up the last company that I had. And again, this is what I always say, that miracles are done outside your comfort zone. When you said how inspirational, until you don't get screwed up, you are not going to change your way. Other, if you're, that's the whole thing. If I give you 100 million tomorrow, you're going to go home and chill out. Yeah, suddenly COVID comes and suddenly there's nothing else to do in your life and you're stuck in your house. Suddenly you have to find out ways to come out of the mess that you are in. So for me, those messes happened in MBA. That mess happened 2008. The economic crisis came up. My last startup collapsed during COVID. Whenever mess comes, either you can sit back home and chill, or you can build up something great. And if the luck, I call luck as probability. 100 times you try, one time something succeeds is probability. People call it luck. So it's all about you going outside your comfort zone. Someone wants to build up something in crypto, doesn't mean he goes on Binance and starts trading tomorrow. I don't say that don't trade on Binance. I'm just saying trading on Binance is not a career path. Going and joining Binance to build up a career, or working with some of these startups. Who knows? Again, this is also probability. Who knows, the startup that you work for ends up becoming what you call OpenAI, and you ended up becoming the big guy around. So it is about coming out of your comfort zone and trying something new.
The true example of leaving the good for the great is what I think Vineet beautifully said. Sarah, over to you.
It is indeed a huge example. Not many people will want to believe what Vineet is saying. They might think that Vineet is just making up a story, or he just stole a story from somewhere else and just applying it to his life. Unless and until they go through the same, because when they're going through that, they don't really want to believe that whatever he's done in the past is just going to guide them right now in a better way. But they feel that, yeah, he might not have done that. He just heard it somewhere and he's just applying it on us. So I have a next question for you, Vineet. As a media founder myself,
Yeah, something,
yes, Vineet.
people have the right to think whatever they want. Hardly matters to me. Point is, even for them in that case, unless they don't find themselves locked in a situation, they're not going to create. Otherwise, if you get paid of 20,000, 30, $50,000 a month, life is great, no problems in life. You will continue like that. You will become 60 and you'll retire.
Absolutely.
Magic will only happen when something goes wrong somewhere and you have to figure out an innovative way. It is known as hustle your way out to greatness.
True. I totally connect with you.
Yeah. You were saying something.
Yes, I said as a media founder myself, I see that AI tools making content creation 10x faster, but the market is becoming saturated. For the creators watching us on Binance Square right now, how do they use crypto liquidity to own their audiences in a world flooded by AI generated noise?
See, again, AI definitely makes processes easier. For me also, when it comes to building up content, I use AI. Today, as I said, I was playing around with market direction questions, and then I was getting answers. So similarly in content, whether it is making a video, whether it is making an image, AI makes life easier. But I think as we go along in the future years, what will count is the humanity part of it. If every AI will give a result plus minus 5%, your human part of you adding value will make it different. Today everyone I talk to everyone about building up reputations on LinkedIn. You can go to one of those platforms and build up great content, put some amazing images and put it over there, and wow, you have great LinkedIn followership. But your experiences that come from you, which the AI doesn't have, these experiences that I talked about COVID experiences, that is you as a person having experiences. You sitting in front of your computer will not put that angle in. So I think going forward, all of this will count. AI will give a base layer of productivity on top of which your experiences will craft a better product out, a better service out, and that's what I advise people, that you need to build your own experiences and train your AI. In that it is about training your AI. AI will be trained by your experiences. If you don't have any experiences, it will be average AI. If it would be an amazing one, you will have great results out. And for crypto part to it, see again, uh, unless you have a product, when you talk about Nas Daily, for example, Nas Daily has a product platform where creators can get paid out of on his platform, and they can build up he has used AI quite well. In less than 5 minutes you can end up building a website and a payment play that can be used across creators across different places. So unless you build up a product like that, monetization is not easy. You have a great audience, maybe sell a few products, sell a few services which are not scammy in nature. The biggest problem people do is with crypto liquidity is, okay, I have 100,000 followers, let me shill this new meme coin token. Unfortunately, that doesn't last long. You end up people end up losing faith in you because someday you will do it wrong. So for me, I would say build up a product or service around that, and use the liquidity to either generate revenue or bootstrap yourself or fund yourself all the way to building a great product or service. Nas Daily has raised close to what $40 million so far. He started 6 years back doing one video a day, and today the last round was a $10 million round, and today I think he's raised 40-50 million dollars. He's on LinkedIn. You can go and see his journey. So uh, everyone gets an idea, and everybody doesn't have the vision to build it into something big and the perseverance to continue with that.
And in today's thing, yesterday, unfortunately, the ceasefire was broken in the country that we live in now, which is the UAE. What do you think is the future? Of course, we talk about safety. People say that Dubai or UAE is not safe, and it is absolutely wrong. Dubai on ground is absolutely safe. What do you think? Like how, or rather, when do you think we will recover as an economy? What is your take on that?
I think it will take 6 months to 1 year. Dubai has this amazing thing that it's a phoenix. It always rises up from its ashes. It has seen the Gulf War, it has seen COVID, it has seen a lot of stuff. The biggest advantage, just like from Singapore and Dubai and Abu Dhabi have, that the leadership is visionary. They don't take years to act; they act immediately, and they are, they say absolute power corrupts, but here it has always been perfect. They have built the best infrastructure, they have welcomed people, they have opened up regulations. So point is, in the end, the V-shaped recovery will always happen. People say that Dubai is doomed. I just have a question. If Dubai is doomed, where will you go? Will you go to Africa? Tell me, if you're going to go to DRC, or if you're going to Joburg. You will go to the US. Are you going to, like, people are not even going there nowadays because of the visa regulations and whatever is happening there. Are you going to go to India? Are you going to go to Pakistan? Where are you? China? Tell me, where are you going to go if you're not going to be in Dubai? So the amount of population Dubai has, 10 million overall in UAE or 14 million, it's a very small market still, in terms of people. So I don't think it's going, it has a pocket. Yes, there is regional instability right now. Someday it will settle out. And that's where, they will pick it up back up and go on a V-shaped recovery. Today is the best time to come here because What happened? I don't know if you remember 1 year back when millions of people were landing up overnight over here in showing off their Ferraris. Whenever there is a lot of noise, meeting the right people becomes a bit tough. But now, because some of those people have left, and end up making great relationships. Whether it is a great businessman, whether it is the ruling family, you can end up meeting a lot of these amazing people because they are very welcoming and they are very open to meeting people. So this is the best time. I think you should always invest your energy and capital and relationships in a market that is down. Bull run every second guy is running around, showing his expertise.
Absolutely. I think Sarah will have a very good example for that because when we actually came to Dubai, I think so. I came in here 2021. Sarah came in a little later in 2022 when the bear run actually started. But I will let Sarah tell her story to you.
So when I came here, I didn't know what to do. Again, the reason why I came here was Nas. So Nas had invited 100 creators to his house, and I was one of them. And my husband was really very kind that he told me that you go ahead and explore the market. And I came here I didn't even know what I need to do next. So I was lost the minute I came here. I was lost. Like, okay, this place is huge,
No, no.
unlike India.
What I meant is, building in Bull Run.
Yes.
Uh,
So I'm coming to that.
actually, yeah.
And then it was summer, and whenever I went to these meetups, I hardly found people. And then I realized that during summer you meet the right kind of people because they are serious with their work. They don't run away to Europe for a holiday, or they don't run away anywhere else. When they mean business, they mean business. So I met the right people, and that is how, alhamdulillah, I think Kryptonite started growing faster because we met the right people at the right time, and we were at the right we just seized the opportunity at that moment.
Absolutely subscribe to that. Whenever the markets are down, whenever noise is out, you end up meeting the right set of people. Again, I had the best example when I was in Bali in the last bear market. I used to normally go July.
We met each other in Bali at
Yeah,
that time in your villa.
yeah. So July, August, I normally take a break, and I'm in Bali. And I remember in one of these trips, 1 year, 2 years back, there was this guy who said, if someone's talking about crypto in the peak of the bear market, definitely he's seriously into it and he knows where it is going. So the point is, whenever it's a dead market, noise is out, people are there, people are building. These are the right set of people that one should end up building. Please remember, how easy is it to meet a top founder in a bull market? Very tough. Someone who's artificially valued at $1 billion is not going to give you time. He has 10,000 people sending him messages on LinkedIn or any of his social channels. But in a bear market, when he's deflated, when Sui is sitting at 40 cent and 50 cent and they have cash flow runway problems, easier to meet the founder in that sort of a market than when it's at a crazy valuation or crazy. And that is where you can add value to these projects. Today I'm just waiting for 2 more quarters for the market to come to my numbers. That is the time where these guys will look at real adoption, real partnerships, and that's where we are building up the Africa story, the India story, the adoption story, getting capital from TradFi, and that's where we'll build a value to our investors.
No, we have another about 7 more minutes to finish this live session. By the way, we would love to have you again. I hope you're having fun, with us. But we would love to have you again because there is so much to talk about. Um, let's talk about the AI agents now. Everybody's going ballistic about AI agents. Uh, what is like? How many agents do you have running? What is your uh, toolkit if you're using? Tell us about your AI agentic setup.
I don't have any AI agents. I have AI apps that I work on. I don't work on. I hardly get time to open up my laptop also. See, and that's what I'm saying. People told me that when AI becomes big, my job will be gone. I told them, what is my job? They said about investing. So I said, what will AI do? AI will find out which places to invest in. I said, my job is not about finding which project will do well. My job is sitting with the founder and understanding whether he will do well or not. So I'm more on the people side of it. I am traveling to 4 different conferences every month. Can AI find people's what do you call behaviors and something, yes, they can definitely end up doing that. My job is more on the people side, not on the computer side. I don't do a lot of those agents, don't get time to do it. I'm busy meeting people, I'm busy building up opportunities for the future. uh, you meeting XYZ president and getting $100 million deal leads to you making $500 million. You sitting on a computer and building an AI agent for trading will also make you money. I'm not saying if you're great with it, you can make money, but I don't do the second one. I do the first one of relationship building and what do you call opportunity prospect.
Great. Uh, so for me in the Web3 space, there are a few people who I look up to. And, they say that never meet your heroes because then you know how real they are. So, but I'm very lucky that some of the people who I look up to, I also know them personally. One is Yat. Yat, I'm a big fan of Yat. We keep chatting on a very regular basis now. His Annie Mocha Minds, the AI agentic platform, is kicking up. Then there is you. I look up to. Who do you look up to, and why do you look up to them? I would love to know that. Like, who are
I
your
think
role models in the Web3 space?
I think Yat is one of the people I all would have also said first, because Yat is, see again, uh, keeping the gaming cycle not coming in and keep thinking about Animoca being too big. Those are things I cannot talk about. But from his vision perspective, Yat is the most amazing person. He started working in Saudi Arabia 1.5 years back when people didn't even know where Saudi and Web3 was. So for him, when you said I have been for the last 1 year going to non-crypto conferences, do you know that he has been doing that for 2.5 years back? So he goes to crypto events for sure, but he goes to the non-crypto events a lot as well. So I think he's a guy who sees the future very clearly and has the strategy to build it up. It's just that Animoca is a very huge company. Success or failure of a company like that depends on a lot of parameters. I am pretty sure one gaming cycle and he's probably right there in EA Sports level or something like that, because his portfolio of companies are amazing. Sandbox was there. They had invested in a lot of top tier games. So for me, he's one guy definitely that I really think great of. Who else? Luckily he's an investor to the fund as well. I think, see, again, I don't know him directly, but indirectly, CZ definitely. I don't know if you've seen any of my, I talk and write a lot about it. I think CZ is definitely someone who has built a great company in a bear market. I don't know him personally. I met him once or twice at some dinners or lunches or somewhere here or there. I haven't interacted at length with him, but he's a guy who from what I hear and what I read, has been someone who has built a company in a bear market. Whenever these whole issues came up, I knew that he will find his way out. I think that is one more guy that I respect for what he has built from wherever he is. Whether those are real stories or those are, as you said,
Narratives.
narrative about him selling his house. I don't want to go there. But those are two, three people I've not met. I met more or less of founders who ended up building great companies. They're more on the mid term of it, but on the big term, I think these two guys would be great people to really. I think Bukele is someone I would love to meet someday. I would like to meet the king of Bhutan, because these guys have actually ended up building great. Their country is into great digital asset stuff. Dubai leadership, definitely, I've met a few. They're amazing. But these are the people I respect, and I think they'll do great in the future, because this digital assets is here to stay.
Now, for all of us listening to this live stream now or later, what suggestion do you have for a mango man, which is it's an Indian term, Aam Aadmi, but mango man, to make money in this bear run, or someone for me? Like, let's forget about everybody else. Now, you have known me for a while, and if I have to ask you from man to man, what do you think I should be doing to make more money in the space of Web3 and crypto, or maybe even beyond it? What's your suggestion?
Meet as many people as you can, find out great opportunities. In the end, you have to figure out who are the right set of people you have to back. As as a media guy, whether it is a QL or an influencer person, in the end, a lot of these QLs who ended up making millions, having putting up on their Instagrams from being a what do you call cashier to a what do you call Ferrari or Bugatti owner. You've seen a lot of these guys. What was their advantage? Probably they met the right people, whether it was luck or whether they met 100 set of people, whether they found that project which they believed in. They say the guy who built Phantom, and what was his name? I'm forgetting the name. He was the third employee in the end. So point is, meet as many people, find out opportunities that you can relate to, either be associated with them, be a partner or whatever. And hopefully when the bull market comes in, if your evaluation is right, you end up at the top of the game. But you can always trade your way to greatness. I haven't seen much traders who have ended up becoming big, but you can always end up meeting people and finding great opportunities as well.
Vineet, thank you so much for your time. It was a pleasure because I think this is the first time that we have spoken in length for an hour. We should do this more often. I hope you enjoyed it too.
Yes, great to meet you as well, and great to be on the chat as well. Definitely, we'll have another engagement in the future. And thank you for your time, and thank you for calling me over here. And great
Thank
talking
you.
to everyone as well.
And everybody watching this, go follow Vineet on his LinkedIn. He's very active there. He's pretty active on Twitter, Instagram. I don't think you're
Oh,
active
no other
on.
social media. No
Okay.
social media for me.
So no social media for him. It's all about making sure that you get the best access to the Web3 and the crypto. So keep following his narrative. I personally have been watching him very closely, and I always message him, and then he sends me a crystal ball image saying that my crystal ball isn't working right
Out
now.
of battery.
So thank you so much once again. Great conversation. Go ahead and follow him, and wherever you're watching this, leave a comment, and maybe when the next time we bring him on, we'll chew his brains with more questions as such. Thank you,
Just
everybody. Good
have
night,
a good one.
and
Thank you.
have good fun.
Cheers. Bye bye. Have a good one.